Ladies and gentlemen, good day and welcome to HGINFRA Engineering Limited Q4 and FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you, Mr. Das.
Good morning, everyone. This is Rishabh Das from Pareto Capital. We represent investor relations for HGINFRA Engineering Limited. On behalf of HGINFRA, I welcome you all to our Q4 and FY21 earnings conference call. I have with me from the management, Mr. Harinder Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, Chief Financial Officer. We will have brief opening remarks from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that would cause our actual results or predictions to differ materially from these statements. HGINFRA will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I would now hand over the call to Harinder ji for his opening remarks. Over to you, sir.
Thank you. Good morning, everyone. I welcome you all to our earnings conference call for Q4 and FY21. I hope all of you and your families are keeping safe and healthy. I am pleased to convey the exceptional performance of our team, who has delivered with their committed zeal to achieve the highest ever recorded revenue in this quarter 4. Despite a challenging year for all of us, we have been able to maintain our momentum and strong efficiency, which has led to a complete rebound in execution post the tough initial quarters. Through our relentless focus, we managed to recover the deficit in the last 2 quarters and achieved our goal of surpassing last year's performance. We ended the year with 2,527 crore of a standalone revenue compared to 2,196 crore last year, a growth of 15%. Our focus continues to be on maintaining profitability, and in line of that, EBITDA stood at 411 crore, while EBITDA margin in FY21 improved and stood at 16.2%, as compared to 15.6% in FY20. Our PAT for the year stood at rupees 211 crore, up by 27% year-on-year. During the quarter 4 of FY21, on a standalone basis, we reported revenues of 1,028 crore compared to 623 crore in Q4 FY20, a growth of 65% year-on-year. EBITDA for the quarter stood at rupees 167 crore compared to rupees 101 crore in Q4 FY20, a growth of 64% year-on-year. EBITDA margin remained stable at 16.2%. The profit after tax for Q4 FY21 at a higher rate of 90% on year, as PAT stood at 98 crore, a margin of 9.5%. We started Q4 with our entire order book for execution that led to the strong performance. This year, we completed the most projects in Maharashtra. There has been a significant milestone achieved in many other projects. We have made a substantial progress in our first HAM projects of Rajiv Chowk, Gaon Sona. We have completed around 82% of the project. In the Narnaul Bypass HAM project also, we have made a considerable progress, having completed 65%. We have completed around 62% in our Rewari-Ateli HAM project. The strong execution on Delhi-Vadodara Package 4, that is the EPC project, also contributed to our performance, and we have completed close to 62%. In Hapur-Moradabad IRB EPC project, we have completed close to 50% of the work. The 3 projects of Rajasthan, namely Banar-Gopalgarh, Bhavi-Pipad, and Jodhpur-Marwar, are also in the final stage of completion, and we expect to move for PCOD in these projects very shortly, within 3 months. Of the projects that we started at the end of quarter 3 and quarter 4, in DB Package 8, we have received appointed date on 7th November 2020, and we have completed around 18%. In BV Package 9, which we received appointed date on 18 December 2020, we have completed around 11%. Our Rewari Bypass HAM project, for which we received financial closure and the appointed date on 15 Jan 2021, we have started with a good pace of execution and have completed around 20%. I am happy to announce that during the year we have won 4 new orders for a total order inflow of 1,933 crore EC value. We have received 2 HAM projects in Telangana. These include construction of 4-lane of access control new greenfield highway sections of Khammam Deravapalli Package 1 worth 590 crore and Package 2 worth 486 crore. Another HAM project we won is in Andhra Pradesh for rupees 767 crore. Project is for development of 6-lane road under Raipur-Visakhapatnam Economic Corridor. We also won a very small NTPC order on Mancherial project for now rupees 90 crore. Taking above orders, our order book stands at 7,040 crore, 7040 crore as on 31st March 2020. Out of the total order book, 59% are EPC contract and 41% are HAM projects. We are now spread across 6 states. Breakup is as follows: 8% from Rajasthan, 28% from Telangana, 11% from Andhra Pradesh, 10% from Haryana, 10% from Uttar Pradesh, and 3% from Maharashtra. Our efforts to strengthen our balance sheet continue to remain our focus. We have managed to further reduce the debt levels. The total gross debt as on 31st March 2021 on a standalone basis stood at rupees 289 crore. This includes working capital debt of 57 crore, term loans plus current maturity of 32 crore. We have paid off the balance unsecured loan amount from promoters, and the cash and bank balance on standalone level stood at 258 crore. Our consolidated debt stood at 771 crore, which includes project loans of 482 crore. Cash and bank balance on console level stood at 263 crore. Our working capital has seen good improvements. The total debtors, excluding retention, which stood at 644 crore in March 20, has come down to rupees 544 crore in 21, effectively bringing down the debtor days from 91 days to 79 days, thereby improving our net working capital efficiency to 33 days. Our strong execution and profit margins that has helped generated steady cash flows for the company. As of March 21, our cash flow from operations stood at rupees 527 crore. Coming to the outlook and the guidance, with the government push on infrastructure development, we see high potential on infra spending and awarding activity. The last financial year has seen tremendous awarding activity by NHAI, with 4,800 crore kilometers of road projects awarded during the year, and with a strong pipeline for the year ahead. We continue to see good traction in road construction opportunities going forward. Additionally, we will continue to look at opportunities beyond road sectors in sectors like railways, water, metro, and airports to diversify our order book. India's infrastructure plans in these sectors are well defined, and there is a lot of project scope available. In this effort, we have further strengthened our business development team with the induction of senior resources who have vast experience in these sectors. Our focus is to explore and tap into these new sector opportunities that will contribute to the top line of our business in the coming years. Talking of the opportunities into account, we aim in targeting order inflow of rupees 5,000 to 6,000 crore in this financial year, with 10% of the outstanding order book in from the new sectors. In terms of execution, we expect to continue the strong execution that we witnessed in Q4. Though there were minor challenges imposed by the second wave of COVID in terms of labor availability, Q1 of FY22, we expect to return to normalcy soon. We aim to continue growing steadily and strategically with a growth of around 25 to 30% for the next year, driven by the better operational and financial excellence while maintaining strong margins, a target of rupees 500 crore plus EBITDA. That is all from my side. I would now request the moderator to open the call for question and answer. Thank you.
So shall we open the floor for questions? Hello. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Mohit Kumar from DAM Capital Advisors. Please go ahead.
Good morning, sir, and congratulations on a fantastic set of numbers. There are two questions from my side. So we maintained a EBITDA margin of 16%, which was quite commendable. But do you think this EBITDA margin will be difficult to maintain because of heightened competition, especially in the fag end of the Q4 FY21 in the NHI bid? That's the first question. And second, sir, when we expect to get the appointed date for the three road assets, which is one in Q4 FY21, and what is the progress on land acquisition on those assets?
Sure. Your first question remained that the 16% EBITDA margin with the aggressive intensity and competitiveness in the bidding that we have seen in Q3 and Q4 of FY21. It's a bit challenging, but only thing is that we have always remained focused on acquiring orders which they do have the good profit margins, and the yield is the same as we believe in the overall period last 2-3 years. So in maintaining that discipline, we always have been very cautious and selective in taking on projects. That has been visible. We could, with a target of about 3,500 to 4,000 crores of new order, which was supposed to be added as a target in the last financial year, but that is almost 2,000 crores added. So that is just because we were not that aggressive, and we believe with the opportunities in highway as from that other sectors also, we are having good opportunities which are available as the bidding pipeline is there. There is a strong pipeline that government has given the indication, NHIA officials have given the indication. So with that, we expect that we would be able to acquire new orders with that margin only. And your second question remains that the appointed date, expectations of appointed date in the land acquisition status. In these three projects, we have already established our land acquisition team along with the association and the coordination with NHI and other officials. So right now, it is about 28% possession is there, and about 56% of the project they are having 3A done, 3D is in the advanced stage. But we expect it will take not less than, I think, as we have seen in the earlier projects as well, not less than 9 months period. In January or say February, we would be receiving the appointed date.
Thank you, sir. And best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Hi, sir. First of all, congratulations to the entire team for a great set of numbers.
Thank you.
Yeah. So first up, it's good that you have revised and upgraded the revenue guidance on a higher base. That's a good thing. Just wanted a couple of things. First, when we are saying 5,000 to 6,000 crore order inflow, and it's a good that now we are diversifying into water, airport, railway. How much out of this 5,000 to 6,000 from the HAM, and how much do you expect that it would be coming in the first half, or everything mostly in the third and fourth quarter would be coming? So that's the first thing. And the second one is on the recent 3 HAM, how much equity we are expecting to be invested. So it would be around 14% of the BPC. That would be closer to my calculation says around 350 crore. So will the number will be same, and how are we going to invest in FY22 and 23?
Yeah, sure. Say your first question remains that with what exactly is the component of 5,000 to 6,000 crore as a new order book during the financial year. We expect that, say, overall HAM, right now we are having about 41% of the order book which is remaining as a HAM projects are concerned. And out of that, the earlier 4 HAM which are under execution, that are on the advanced stage, we believe that almost out of that, all will be completed by the year end, because 3 are at a very advanced stage, and also expect Rewari bypass would be completed by the time, 90% would be completed by that time. So almost 14% of these order book, this total entire book is HAM projects, all 4 HAM projects. That we expect that 13% or 14% would be consumed during the year, executed during the year. And the second part remains, what exactly should be the breakup of 5,000 to 7,000. Means we are expecting some 1,000 crores of orders from the new 3-4 sectors, that's primarily more focused on the railway and of course airport. So that is the one when we believe that at 5,000 to 6,000 order addition, we would be expecting 1,000. We are again expecting some 2,000 to 3,000 crores of new HAM projects, which would give a fair that balance of the EPC to HAM in this entire portfolio, which we believe that within the year if we execute 3,200, that would be a balance of EPC on HAM, which would be quite a reasonable percentage. As far as you said that these 3 new orders, where the equity requirement remains, definitely you are right, it is about coming about 355 crores. It's very indicative basically. It's coming about 355 crores. And the total equity requirement for the earlier 4 HAM projects during the current year as a commitment, it would be coming at about 87 crores. And out of this in FY23, 21 crore would be only which would be required for the earlier 4 HAM projects. And for all 3 new projects, we expect that with the appointed date and everything in place in, say, Q4, that we believe that 100 crore odd equity would be required for this current financial year, and we project some 175 crore in the FY23, say next year, and some 80 crore balance in FY24.
Okay. So when we are saying so in terms of the monetization, we started talk. What's the
Hello. So your voice is breaking. Can you come in a better reception area, please?
Is it fine now?
Little better.
Yeah.
Yeah. So, sir, I was saying that in terms of the monetization, is there any plan that we can expect by end of this year we can see some monetization, because both combining to put together 7 HAM projects, now we will be having 750 odd crore equity invested. And when we are targeting another 2,000 to 3,000 crores, so another 350 more crore to be invested. So what's the way to look at in terms of the monetization?
Yeah, sure. Definitely it's on the cards and it's on the highest priority. We are not going to say continue with any asset for a long period, and that process has already been initiated, and now that is the area where it has been approached to the investors, and we are having, say, 1 or 2 calls done. We expect during the financial year, once we would be in a position that in Q2 and Q3 we would be completing both the projects, all 3, since all the projects, these projects will definitely be monetized during this financial year that we expect. And as soon as we complete Rewari Package 4, because we are in discussion with all the 4 packages, all the 4 projects of HAM, which are execution. So that is on the highest card, that within this financial year to monetize at least 3, and then as soon as we complete any of the further HAM projects, we would be in that phase only.
Okay. And lastly, sir, in terms of now, how much are we looking at the capex for this year, and how do we see the debt levels by end of this year? And in terms of the working capital, will it remain the current level, or can we see some improvement further in the working capital?
See, the working capital, which is about at about 30, net of working capital is about 53 days. That is a significant improvement we have seen. We could foresee a bit of an improvement, but not that significant because it's a very reasonable level. And you're talking of that what exactly would be the your first question remains as that
CapEx and
CapEx addition for this particular year. We have planned for addition of 75 to 80 crore of new equipment, and of course about 35 to 40 crore would as a gross block would be disposed of, because that is a process which we have followed, that any equipment with the age of about 5 to 7 or 10 years with three types of classification of those equipment, we normally dispose them out. Like last year, we added the equipment which were added about say 90 crore, but we disposed 36, 97 was the addition, 36 was disposed. So net addition remains 61 crore in the gross block in the capex in last year. So this year, again, the loan liabilities which has a current maturity which would be paid is 62 crore. So the total debt would be coming at about this range only 272, 300 crore with the incremental working capital entire requirement.
Yeah, sir, I follow more questions, but we'll be seeing you. Thank you, and all the best. Keep on doing the good work.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Parikshit Kandapal from HDFC Securities. Please go ahead.
Hi, Harinderji. Congratulations on an exceptional set of numbers and all-round improvement in growth and cash flows. So my first question was, sir, if I see your net working capital, and according to my calculations, it reduced from 104 days to 71 days in FY21. And if I take it on a base of 4Q revenue, it comes down to 44 days. So I just want to understand during this quarter, I mean, what were the significant items which has moved it? So obviously there were pain points like Rajasthan and one of your client who was like delaying payments. So has that been sorted out? What will be the balances, receivables there, if you can touch upon that? And also on the current debtors, if you can give a breakup of third-party debtors and SPV debtors. So that was my first question.
Uh-huh. Say the debtor movement which we have seen that in the current year, the debtor which have been reduced by 190 crore effectively was 150 crore, including if we see 35 crore increment in the security deposit retention money. So that is a reduction. As of now, it's 455 crore. It's 455 crore. Earlier, it was 643 crore. So the breakup of this particular debtor remains that if we are talking of Rajasthan project, where the significant improvement has been there, we have seen almost the entire amount which we did which was payable last year and which we did this year, we almost paid. It's just of 28 crore as a debtor and 25 crore as a unbilled revenue, which is balance 53. And we believe that in this quarter 1 or maximum by quarter 2, we will be paid off. We will be receiving this particular amount because they are having the budget committed now. SPV remains the debtor of 79 crore, all 4 SPV, that is a 79 crore as a P4 balance. On NHA, all 3 projects basically, these are all DB projects, that is 82 crore. Adani, that is a Telangana project, which is 67 crore. And IRB stood at 138 crore, that is 138 is the debtor balance and 20 is the unbilled part. And Maharashtra and other projects remains. Maharashtra is 30 crore. And some COS approval are pending in Maharashtra project still. So this is 35 crore as an unbilled portion. So this is all as a debtor and unbilled part.
Okay. The second question was, sir, Abhi, on the order book, what is the total eligibility of taking the mobilization advance, and how much is as of now, as of March, and is in the balance sheet? So how much is standing there in the balance sheet?
So as for the mobilization advance, we are having 264 crore of mobilization advance and some material advance and other secured advances all there. So that is project advance basically. It's coming at 323 crore as the total advance. Earlier in the March 20, it was 216 crore. So during the entire year of execution, we expect that almost some 50 to 60 crore would be left out as would not be recovered. That range, some 75 crore. The remaining all would be recovered during the course of execution in this financial year.
But have we taken all the advances? So you think it's
No. We still have the balance of about 100 crore, which is scope available which we can apply for the mobilization advance. In the current execution, we have the projects which we are talking of Delhi Vadodara package 8 and 9. There is still which we can take.
And lastly, sir, any significant advance came in fourth quarter? So what was the advances you have availed in fourth quarter of financial year 21?
Fourth quarter, we received 62 crore as an advance. It was in package 9, which we received appointed date in December 2020.
Okay. Okay, sir. Thank you and all the best. And once again, congratulations on a good
Thank you. Thank you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking Limited. Please go ahead.
Sure. Good morning, sir. So just one thing that I wanted to check is that you did say that we have added senior persons to our execution team to really get into newer areas and all. If you can just talk a little bit more about that. What is the details of the
So earlier, we definitely in the last year 2021 we tried and we bid for many of the railway projects and a few of the water supply, just one or two. But majorly it is basically a kind of R&D required, and at least a back office support is very much required for taking on opportunities in other sectors. If you are talking of 3-4 sectors we have, and they are the big government has always given the indication that if you are talking of JJM in water sector, also then if you are talking of this railways project, if they are having 2030 draft, very high speed network being developed. And there are a few more opportunities coming on in the metro where the tier 2 cities are already there in the airport opportunity. So we really want that a good team is to be there. That we have added 5 good resources and they are all having the good experience as far as doing this business and business R&D sort of. So this is all about that we have integrated the team, we have strengthened the team of the business development by adding those people. And we believe that in the current year, we would be more focused taking on opportunities in these sectors.
Good. So I'm assuming these 5 resources we are talking about is on the technical side, more on the
obviously technical.
Yeah. Got it. Sir, also just wanted to check on Gulabpura Chittorgarh. What is the remaining order book there? What has been the execution in Q4?
It's almost done. Just a 20 crore of the unbilled revenue, which I told that with the IRB, it is there. That a final bill and another approvals are there. But ultimately, it is entire completed. And it has been completed. Just we are showing that nil balance, order balance in Bhilwara, that project. So just because of the reason, because that project was having that 600 something project size, but concluded at about 500. So there is a thing about 140 odd crore rupees. Means as far as the IRB is concerned.
So as far as we are concerned, our remaining scope is 0. We only have some unbilled left.
Sorry?
So as far as HG is concerned, there is no order remaining.
Yes, because therefore there was some negative scope and a few work could not be executed because of land acquisition. So that is our scope is now completed.
Got it. And lastly, in Maharashtra North, we have not seen, we have seen a relatively slower progress, and also in Adani project, we have seen relatively lower progress as compared to the other projects. So any particular issues are there?
I think for Adani project there is not major issue as such because there are 4 railway ROBs to be constructed. Their approvals, they took a bit of a time, but we executed some 110 crore in Q4 in Adani project. And apart from Maharashtra, in the entire year, it was 69 crore being executed in FY 2021, and in Q4 it was 20. Now the balance quarter which is left out is mainly in the deferred portion. We are saying that in a few of the projects, which is the land acquisition, there's some 200 crore order project work is left out. And that will be very gradually and very late would be executed.
Right. So just coming back to the Adani project, there you think FY22 you will see a good progress in execution, or it is likely to remain a little slow?
No, I think we believe that almost 85-90% would be completed by March.
85-90% will be completed. Sure. Yeah, that's it from my side. Thank you. Thank you, sir.
Thank you. Next question is from the line of Viral Shah from Prabhudas Lilladher. Please go ahead.
Yeah, good morning, sir.
Morning.
Congratulations on the great set of numbers and hope entire HG family is safe and fine.
Thank you.
Yeah, sir, 2 questions from mine. What is the bid pipeline in terms of road looking like? and other verticals when we talk about. So where are we in terms of bidding for achieving this 5,000 to 6,000 crores of order inflow guidance?
Yeah, right now, whatever orders which were supposed to be awarded by NHAI, so definitely they are always, say almost in quarter one, they were all supposed to be awarded. So there's almost 45 to 50,000 crores of orders that the NHAI is having as a left out say stock of last year. And the NHAI again given the indication that they believe and they expect that some 4,500 or 4,800 kilometers to be awarded in this year as well. And again in next year they are targeting with Bharatmala second, those new projects which are at the DPR stage, they would be targeted with and then apart from highway, I think it's not that only Q3 and Q4 would be the way during this year when the awarding would be done. I think within Q2 we expect this would have been done in Q1 if the lockdown and this COVID second wave would have not affected. And then Q3 and Q4, but again the project as we have seen in NHAI, these are all the stages which we have seen from 2015 onwards when Bharatmala 1 and 2 were declared and thereupon some DPR land acquisition and it took almost 2 to 3 years before prior to awarding. That is again is happening in this railway, and we have seen in the even water supply sector in Rajasthan even almost 20,000 odd crore of the projects which are at the DPR stage, they would be all awarded during this and next financial year. So with that, a lot of good opportunities would be there, but definitely they would be coming as a bidding, at the bidding stage would be coming in a gradually in a phased manner.
Oh, fair enough, sir. So secondly, we have been consistently reporting consolidated EBITDA margin of around 18% and a standalone of around 16%. So do we expect this margin to continue? That is first. And is there any one-off during the quarter for the margin?
The margins to continue definitely with that we have already done that prior exercise. If any bidding to be done, that margin should be intact at that level. And again, we are having all the verticals, all departments having the accountability and responsibility to just optimize on the budgeted number if we are estimated at the pre-bid stage. What exactly is their productivity in all the components. So with that only we have seen that if we have planned to bid any project with the margins of about say 14-15%, if we end up with 17-18%. So that is the whole intent behind that. Our people are working behind it and just they are looking at the say opportunity where the operational efficiency can be there. So this is the first part where the margins we look forward it would be all intact, and there is a fair chance that it's incremental, not at that big number, but that is definitely there is a fair chance of increment. And what else was the second question? I could not remember that.
Is there any one-off in the margin per se for the quarter? In terms of provision
No provisioning has been done in this quarter.
No. And lastly, sir, the O&M income of around 150 to 200 crores which we were booking, that has been completed or that is going to continue?
No. It's still with the running projects and with the completed projects. The completed project is about 100 crores of revenue which is expected in the next 3 years. And again, in total entire period of 5 years, it is coming at about 125 odd crores rupees.
And this is per year, right? Or it is over a period?
No, it's spread. It's basically spread in years. This year we are looking at about say 30 crore O&M revenue. Next year it will be 35. That is well.
Fair enough. Got it. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Rita Tillaramani from Investor Mutual Fund. Please go ahead.
Hello, sir. Congratulations on the good set of numbers.
Thank you.
Sir, firstly, on what is the 3G land acquisition status for the new project?
3G?
3G, yeah. 3G.
No, not yet. I think the position of 3G is not done, but at the 3D stage, even the people have offered or say we have taken the position of about 23-24% of the land where the survey activity is going on.
23-24% on 3D?
Yeah, but at the 3D stage only because the award at 3G means compensation being given. But that compensation is not yet given. But at the 3D stage they have, because in anticipation, because the land is going to be taken in any case by NHAI. So usually it happens that all the field owners or the owners, they usually offer their land to TJ. whatever is the stage right now, because we are not going to crop right now in this cropping season, this Kharif season.
And so, second question is, how much is the labor availability currently, broadly?
See, right now it's depending upon the project to project. With the NCR, say if you are talking about Gurgaon, Solar, definitely it's about 50% affected. But on an overall average, it is about 77 to 75 availability of labor across all the projects.
And so, despite certain amount of challenges in terms of labor availability, are you confident on the 25 to 30% revenue growth guidance?
See, it all is, I think, it's a temporary phase, and people who have gone back at Holi, they have not turned back, and that is the one reason. Now, again, the second part is because they have learned how to live within this condition. So they are coming back. It's not that they are just reluctant going back to work. They are coming. Few people left, but they are coming as well. That, again, we are looking at a dip of about 10-15%, which we were expecting in Q1. But we do not see as entire 5,000 crores of orders. They are under execution, more than 5,000. So we do not expect much of the turbulence in the coming phases in the Q2 and Q3, Q4. Then as we have seen last year as well, Q3 and Q4 yielded. So almost 1,700 plus 1,500 crores. So 1,700, 1,800 crores means majority of the execution has been done in 6 months only.
And lastly, what would be your debt guidance for FY22?
We have seen that the debt is normally, there is no big term debt. It's only a working capital and that. So we expect that the new capex addition, which we with some 64 crores of commitment as a term debt to be repaid during this financial year. So that is a range of 270, 280 or 300. That is the number. So that would be the reasonable range which will be continued.
Oh, perfect. Thank you, sir, and good luck.
Thank you. Thank you.
Thank you very much. The next question is from the line of Dhruv from Monarch AIF. Please go ahead.
Yeah, good morning, sir, and congratulations on a good set of numbers. Yeah. So my question is, as we are seeing this commodity impact as well as global, so from our sector perspective, how do you see this inflation impacting our margins on a HAM versus EPC project basis?
No, I think in both the models, if you're talking of HAM and EPC, this price escalation, it is contractual. We are covered with the negative or positive inflation. So that is how we are covered, but we have seen the difference between what we have compared internally, the difference between till October, say what exactly was the price variation versus the hit on the commodities to October to March. But we have not seen a significant, a big number change. It's only a 0.1 or 0.2%. And that is not a big number. And it is a temporary phase, basically. Even if it continues, so that is not going to impact margins significantly.
Okay, so that is good to hear. And for just to confirm, you said 355 crores will be our equity requirement for the HAM, right?
For the upcoming 3 HAMs, these.
For the upcoming 3 HAMs?
Yeah. For the running 3 HAMs, or already we are running with 4 HAMs, so about 107 crores which is left out, which is out of that 87 planned during the current year, say FY21-22, and say remaining 20 would be for Rewari bypass, it would be next year.
Okay, and this 355 will majorly for the new projects, that will come majorly to FY23 and not that much in FY23.
Yeah, we have taken on record that if any case by say January or February we receive the appointed date and entire land in our possession. So by that time, because this is a total normal course of about 6 to 8 months, which we believe to take the possession, establish ourselves, design the project, and a financial closure is to be done. So by the time if we expect 100 odd crore, we have looked that say 100 odd crore would be the most optimistic requirement if we take on the appointed date in January or February.
Okay, so this 100 crores will be for the new project.
Correct.
Okay, sir. And do you see any impact of your raw material or any manpower issues that could impact your execution in the first quarter of FY22?
No, I have already just explained that there's not a big dip we expect in the execution, but we have seen that in quarter one would be a bit impacted. Earlier we checked against that. I think it would be 10-15% drop in quarter one. That would be made up. We can make up very easily in Q3 and Q4 subsequently.
Okay, sir. Thank you so much. Thanks.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, hi sir. Thanks for taking my question and congratulations. Very good set of numbers. So most of my questions have already been answered. Just two from my side. So one was essentially when I look at the order inflows for the year, all these 4 orders that we've added are in South, Telangana and Andhra, which are, when I look at our historical track record, I think our stronghold was Central India and Northern India. So what made us go to this geography? Is it that, the competitive intensity is on a higher side in North and Central, which is why we were required to go to South? And to continue to that, I think given the fact that we have only one project in South as of now, Adani project, and the equipment bank would be keeping in mind only one project as of now. So would you be required to kind of spend money to be able to kind of scale up execution at these three new hybrids?
As far as concentrating ourselves into new orders in Telangana or Andhra in South, it's not that. During the entire year, I think in Q3, Q4, we bid for almost 55,000 crores of projects pan-India. Earlier, we were all confined to 7 odd states where the bidding was done or we usually bid. But now we have bidded in 15 odd states. So the 15 odd state means if we are having the opportunities elsewhere, and we have seen that Telangana being while working with the Adani project, we have seen that this is a good state to work with, and that as far as raw material, law and order, many things are concerned. So then and then Andhra and Telangana, almost same demography and geographical conditions altogether as far as. So that is the call taken on the basis of one wants the experience first. So in Maharashtra, definitely in Central India, we have worked in 2013-14 that state, and then the Vidarbha zone only. So that was the reason we took many orders in the later part. So it's not that it's just an event that happened. It was very strategically planned, and we focused on the margin. Though we have bid in entire India or 15 odd states, and there were 50,000 crores, but we could win only 2,500 orders. So it means that entire execution where the aggression was there, we could not win the project there.
Sure. So possible to share what was our success ratio in Telangana and Andhra versus North and Central India in terms of the number of projects that you bid in?
No, I think in Telangana, Andhra, and these, because we have not bidded in Tamil Nadu, Kerala, but we have seen that we have bidded for almost 25,000 crore, like Bangalore, Chennai was the major one which we bidded, and other projects as well, and these were there. But we could win only 10% in that, the 25,000 to 2,500.
Sure. So does it mean we bid for almost around 30,000 crore rupees of orders in some of these other states and we couldn't get even a single project there? So does it mean the competitive intensity is on a higher side in Central and Northern India?
No, I think it's not that the competitive intensity. It's only a case to case, because you have seen that Delhi Worldcon taking on 5 odd projects in this Andhra zone. So it doesn't refer to that, your specific question. It is just because in Central India, North India, there is more of competition. Yeah?
Okay, sure. And the Rajasthan project, I think we were supposed to finish that project. The balance work was wherein, we already had ROW in place, was supposed to get done with.
Definitely, it is almost 100 crores. Apart from whatever we have done, we are going to receive some 60 or 55 odd crore, which we already executed in the form of debtor and unbilled in the quarter 1 and quarter 2. Some 100 crore work is left out as a deferred portion, and which we have already started. Few of the land is already awarded, provided to us. So that we believe within next 15 months it will be completed.
So kitna proportion is still not available in terms of ROW?
I think it's entire portion, 105 crore, that is the left out they have provided, and within next 12 to, because their major part is ROV. 2 ROVs are there. So that will take at least 15 months from now.
Sure. Just one last, if I may. If you could share your receivable numbers for due from Tata and GVK, please.
GVK definitely entire point, say 18 points from 3 crore rupees, including retention, and that is all provided. That is all provided last year only. And in Tata, it is the unbilled portion of 27 crore. That is just because of few GST, and as we have completed this project on 13th of April this year only, we have received the completion. So now the things would be taken up as far as the tariff and this GST. So we expect in quarter 2 we will be receiving this particular amount.
Sure, sir. Thank you. That's it from my end, and all the very best for future, sir. Thank you.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Jiten Rushi from Axis Capital Limited. Please go ahead.
Yeah, good morning, sir, and hope I'm at your end. And congratulations on extremely good numbers. Sir, just few questions on the bookkeeping side first. So you said mobilization and outstanding is around 265 crore as on March, right, sir?
Mobilization advance, correct.
264 crores. Yeah. And but sir, and another.
This is to mobilization advance and some client advance like we have taken some material advance and secure advance. That is altogether coming at 323 crore.
So but you said 323 crore is out of which only 100 crore you have not taken, and you have taken 223 crore, right, sir?
No. I'm talking of as on in the books. It's 31st March 2021. It is 323 crore. Not only it is a mobilization advance. 264 is the mobilization advance. Okay, and remaining part is some 60 crore is part of the client. Say this is a secured advance or material advance.
So any new mobilization advance expected now, except for the 3 HAM projects?
We are having the opportunity to take 100 odd crore rupees, but normally we feel like if in the month of say quarter 2, if we believe that if we are at the stage we can add. Otherwise, in all the HAM projects it will be added.
And sir, on the retention and unbilled revenue, what is the number, sir?
The retention is stood at 215 crore. Which earlier it was 180 crore. That is a big number where we believe that with SPV retention, as we complete the entire project, that would be released some 45 crore in that. And Tata project we have completed. That is the one where we would be expecting. And once we DV4 project, Delhi Vadodara package 4, our major retention is there. So once we complete this project, then we will be receiving the retention. That is significant. We expect that it would be coming at 170 or 5 or 170, 80 crore rupees at the end of next year. And what you are talking of, that second part is unbilled. Unbilled definitely coming over 265 crore as of now altogether, I assume. But then we expect that all the projects which we have already completed, like if you are talking of the Tata project, IRB and the Maharashtra projects and PWD projects, definitely. All running projects we may have that unbilled, but remaining some 100 crore is expected to be received.
Sir, any arbitration or ongoing claims right now?
No, only just 11 crores of claim is there. Our arbitration is going on. That is with Agra Development Authority, with the project which completed in 2016. Though we have been awarded 11 crores. That is 11 crores. This is Agra Development Authority. Agra Development Authority.
Okay. This is a road project, sir?
That was a road project which we completed in 2016 and already awarded certain part of it. 7 crore has been awarded by them. But we are again proceeded in the 11 crore is the total claim that we are having.
So we are yet to receive the claim of rupees 11 crore.
Yes.
Okay. And sir, on the outstanding bid pipeline, so can you just throw some light on the outstanding bids as on date, sir?
Sir, I have just already spoken about it because in NHAI, which were earlier supposed to be awarded in financial year 21 March, so they all have now been extended.
What is your outstanding bid right now? Any projects you have bidded for and you are expecting any?
No, that is, I think, just 8,000 crores of bid we have already bidded, where the results are yet awaited. 8,000.
These are NHAI projects?
These are NHAI projects and 2 railway projects.
So can you, and 2 railway projects is how much, sir?
It's all mixed, I think 350 odd, it's coming at about 700.
Okay, so 8,000 is NHAI and 700 is railway. And sir, this NHAI is mix of HAM and EPC or it's all HAM, sir? And state
it's a mix of EPC. It's only 3 HAM and 5 EPC.
And which state, sir?
Himachal and UP and I think one or two. I could not remember right now. One or two. Punjab, yeah, correct. One or two on Punjab.
So you said GVK 18.3 crore. You have already written off, right, sir?
That has been provided here.
Provided. Okay, sir. And sir, on the execution front, so you have given a guidance of 25 to 30%, but the main execution we are expecting to come from the HAM projects and the Delhi Worker projects.
I think it is a all mix of all the projects. As we have seen in Infra 4, it's a total contribution from all the projects. Say adding, because 35% from HAM, 30% from BV projects, and Adani again, and 110 crore, and even IRB 190 crore. So that is
so this year. Hapur Moradabad, when can you expect it to complete? Because we have done good work in
this financial year. It will all be completed. Just it's about 570 crore which is left out. This entire year will be completed. So we will be seeing a lot of all the projects would be contributing to the execution in this financial year. It's not only EPC or SPV.
So this year order inflow is a key for our executions for next couple of years. Then.
Yeah, of course. I think that is only. And regarding talking of the GVK, which has been provided, but we have received some 7.5 crore last year, and we expect this entire amount would be received during the current year. That they have already committed.
Thank you very much. Sorry to interrupt you, Mr. Rishi. I'll request you to come back in the question queue. The next question is from the line of Alok Devra from Yes Securities. Please go ahead.
Good morning, sir, and congratulations on great numbers. So just coming back to the previous question about the order inflow. So, sir, you have guided for around 5,000 crore of order inflow. But even last year, if we see, NHA actually awarded around 4,800 kilometers, and we managed to win order inflow of nearly 2,000 crore. So what gives us this confidence? Is there any downside risk to this number? Because we are talking about, a similar NHA awarding to happen in FY22 as well. So if you could just elaborate on that.
No, I don't see anything, as already spoken earlier, that without compromising on the margins, if we say during the entire year, if we have bid it, because the number of bids would be more, we would be going across all the states, so like 15 odd states we have been bidding. So as far as opportunity is concerned, NHA is having definitely a strong bidding pipeline of about 4,500 kilometers this year as well. And with that, most of the bids or aggression was a bit high last year, where about you will see different unknown faces, about 50 to 60% were the quite unknown faces. So there the NHA, their people, they are also having the concern, and they are also looking at the big challenge, how they order would be taken off. But then again, you do not see every time they would be coming and just spoiling the maintaining that particular discipline. So with that, we are expecting that this year would be a decent year as far as competitive and aggression is concerned. And with that, we are not targeting a very big number. The 5,000 to 6,000 means 5,000 from NHA or highway activities, say 1,000 from other sectors. So that is not a very big number with the upcoming opportunities.
Sure. No, I was just wondering, because NHA, what we understand is the similar number will be awarded, or perhaps slightly lower. Then we are expecting a significant jump, and competitive intensity, what we understand is would be there for a while till the order books are full. And
that is our sense. I have given my sense that definitely because almost 50% of these projects are mostly have being awarded to those phases, those companies which are not having that strong background as far as execution and financial capabilities. So the NHA is also having that cause and concern. But we do not see that big competition this year.
Sure, sir. Thank you so much, sir. That was the only question from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Dipen Shah, an individual investor. Please go ahead.
Yeah, thank you very much for the opportunity, and congrats for a very good set of numbers. Sir, most of the questions have been answered. Just a couple of questions regarding financials. Firstly, out of the guidance which you've given about 3,200 or 3,000 odd crores, what is the amount of revenues which you expect from the existing 5,000 crores of projects which are going on? and how much should be from the new orders which are yet to start?
We are not taking any assumption for the new orders which are to start. We have already considered whatever 32 or 3,000 to 3,200 number which will be executed in this 5,000 already under execution.
Okay, that's great. And in the opening remarks, did I hear you correctly saying that the EBITDA for the current year should be 500 odd crores?
Yeah.
Sir, we have already done 470 odd crores in the current year. So,
it's 411, I think. You are wrong. I think it's 411 in the current year, I think.
Okay. Maybe then I am mistaken. Okay.
Yes.
Right, sir. So 100 crores of EBITDA on a revenue of whatever 3,200 crores. That's the guidance.
Correct.
Yeah. Thank you very much, sir, and all the best.
Thank you. The next question is from the line of SK Shetty, individual investor. Please go ahead.
Hello.
Hi.
Hello.
Go ahead, Mr. Shetty, you're audible.
Sir, my question is related to the cash flow statement. Sir, do you think we can see any improvements in cash flow from operations in the coming years?
Yeah, of course. I think which I have given indication with the unbilled portion of about 100 crore, which we expect that would be realized in all these complicated projects in this year. With that, I think there would be incremental operational cash flow would be better.
Okay. That's all, my friend. Thank you.
Thank you.
Thank you. The next question is from the line of Ankita Shah from Elara Capital PLC. Please go ahead.
Yeah, thank you. And congratulations, sir, on a very good performance. Sir, on the order inflow side, apart from the NHAI, railways, metro, airports projects that you've highlighted, would you also be exploring subcontracting work from some of our existing clients like IRB, Adani, who've recently got sort of new road projects?
Yes, sure. See, basically, it's not that we are ruling it out. The only thing is what exactly is it. We have executed some 25% in Adani project, and we expect that by this March end, it would be 85 to 90%. And the project which they have won, those projects in the vicinity, they are also offering us. And with that, with the exposure limited to that extent, by September, October, or December, once they are going to be commenced, by that time, if we execute 60% into it, so it means that the limited exposure would be there, not big exposure in those two clients.
Okay. And margins will remain same even in those
Of course, that is the prime. Yes, that is the prime way to look into it because they were all two. Both of them are having the HAM projects, and we believe that if they are looking at their internal budget, they would be looking at. We would be taking on call with the intact margins.
Got it. Also, sir, you already mentioned the equity requirement number, but if you could help me with, project-wise total requirement invested as on FY21 end, and then balance in 22 and 23. How is that will be?
So you are talking of total entire equity being deployed, project-wise.
Yeah, right.
I think you can just write it out.
Sure, no problem.
This Gurgaon Sona, which was the first HAM, only 7.3 crore is left out. Total requirement remains 72.9, and rest all has been done. Just 7.3 would be done within this year. In Rewari Ateli, that is a HAM 2. That is, we have already 53.2 has been done, and in this year 23.3 is left out. Total requirement 76.5. In Narnaul Ateli, that is on 101.1 already done. 37 is left out, which will be done during the year. So this is 138.1. In Rewari Bypass, it is 41.44 already done, and just 41 left out, which would be, we are looking at some 20 in this year and 21 in the year 23, FY23. So this is the total of breakup of about 87 required in this financial year out of the 4 HAM, and 21, which would be for the next year out of the 4th HAM.
Got it. Sure. Thank you so much. And all the best.
Thank you. A request to all the participants, please restrict to one question per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Parikshit Kandapal from HDFC Securities. Please go ahead.
Just a question on PQs. So if you can give us non-road segment, PQ segment-wise, which you are targeting, if you can please provide some insight on that.
The other sectors which we are looking at as a new orders.
Yeah.
So definitely, as earlier explained, this JJM in water supply, as government which they are targeting by 2025, earlier it was 2024, that they would be providing the potable water to every household. Tap water is there. So there's a lot of opportunities are there, where in Rajasthan we have seen that only 8,000 crore being awarded last year, and we are going ahead with some alliance with a strong player that again we would be executing on a back-to-back basis. For this is the target which we are looking in the water supply as well as an MP, and this state we are again looking into small possibilities. And apart from this, if you are this is a high-speed network being planned, say, almost as the expressway being planned in Bharatmala. Now this in railways, they have planned the high-speed network, also doubling of certain and electrification. But we have seen that we are not looking into electrification and transmission, but we are looking into those opportunities where the civil structures or civil construction is almost 70 to 80%, like this highway in railway sector. And going ahead with the completion of this Gurgaon project, we would be having the qualification for doing this elevated portion. That is basic qualification required in metro or in any of those projects where high-speed network being planned. Like we are talking of Ahmedabad to Mumbai, there the elevated portion is really significant. They are LNT 1-3 projects. So these are few opportunities in sectors which we have seen that there would be we would be having fair chances to take on.
And just one last thing on the year-wise equity investment for 22 and 23, you can do 22-24, 22-23-24 overall.
For 23-24, what you are looking at? What?
22-23-24 will be total equity investment in hand overall, not project wise, overall.
The overall as say in the existing ham and the say forthcoming. If you look forward, that 100 crore we have planned this year for these hams, so it is coming at about 187. So 187 is the tentative investment in the new 3 hams as well as existing one. If you take on any new 2-3 hams, which are already say 2,500 or size, then again the same requirement of 355 crore would be there. They will look into that number and the left out number of about say 255 in the earlier 3 hams, which we are right now taken on. So this would be 600, almost 600. So this 600 would be in 23 if there was a 300 or in 23 and some 300 odd in plus in say 24. 23, 24, like that. In 22 it's 187, 23 is 300, 24 is 300. And again, as far as monetization program is concerned, that we are already targeting that as soon as we complete these projects, so by the next 6 months, I think deal can be done.
See, 187 crore investment in FY22, 300 and 300 in 23 and 24 each. The total investment
if we add on with 2,500 more ham in this current financial year.
Okay. Then about 780 odd crores is the total investment in next 3 years, 22, 23.
Correct.
Okay, sir. Thank you, sir.
Thank you.
Thank you. A request to all the participants, please restrict to one question per participant. Next question is from the line of Ashish Shah from Centrum Broking Limited. Please go ahead.
Yeah, so just one follow-up. When I look at the consolidated order book, I mean the notes to accounts we have given that our outstanding order book is 7,677 crores, whereas our standalone order book, as you said, is around 7,040. So what is the difference?
On all the ham SPVs, if you see in the console base, the total order balance is as per NHI being awarded them. And if you see from SPV to EPC, it's almost a difference of about 18 to 15%. That is, if you have 100 crores from as a SPV, if there is an NHA order, and for EPC, HGINFRA would be having some 85 crore rupees. That is a range. Roughly, I have given the guidance.
Right.
So that is the difference.
So basically, we are not saying that this 700 crores can also kind of come back to HG in any form. It's just
no, not at all.
So from HG's standalone point of view, 7,040 is the number. Right?
Correct.
Okay, sure. Thank you. That's it.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for the follow-up, sir. Sir, just one small bookkeeping question. So when I look at the order backlog, we have this component of almost around 440 crore rupees reflected as others. So out of this 440, I mean, the number till last quarter used to be 100. I am assuming, I mean, you included that NTPC project here, almost around 95 odd crore. So that would explain 200. So what would explain the remaining 240?
The remaining means 240 orders, balance orders.
No. So I am saying when I look at the order backlog, the breakup that you gave on a project.
If you have seen that most of the projects being captured here, if you are talking about Rajasthan project, that 105, means in the Maharashtra projects, like most project 224. So if you are seeing to the breakup, others because a utility that was earlier as a part of our contract not being considered here in the amount, that utility is there, and others is if you see that these all projects where we are running with the Kondal Jhadar project is there about 20 crore which is left there. So these are all few small size which are added to this number.
So did we receive any utility work orders this
almost
quarter?
120 odd crore rupees of utility work is left out. This is being captured here.
Okay, sure. Thank you.
Thank you. The next question is from the line of Dhruv from Monarch AIF. Please go ahead.
My question has been answered, sir. Thank you.
Thank you. The next question is from the line of Jiten Roshi from Axis Capital. Please go ahead.
Yeah, thanks for the follow-up. So just one question on the fund-based and non-fund-based limit, and what is the utilization level, sir?
Fund-based and non-fund-based limit total as of now, as the company is having. What you are talking with?
Yeah.
It's 1120 crore altogether.
Sorry, sir?
Standalone only. It's standalone only. We are having 1120 crores of limit, which are already tied up, and we have assessed limit of 1540 crores, where the additional exposure being target timeline is about 6 months. That would be all done, where the joint documentation would be done. So out of 1120, 140 is the fund-based, and the utilization is almost 56 crores. And the remaining is the non-fund-based, which we are having some 810 crores, to be very specific. That is the utilization. So almost 178 crore unutilized limit is available. That is in the bank guarantee, non-fund based, and some 985 crore rupees in non-fund based. That is in the 1120 already disbursed limit. If you are talking about the additional limit, that would be all other than that.
So from this 1120, now we are applied, and it will go up to 1540. 40 in a couple of months. Okay, sir. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to Mr. Harendra Singh for closing comments.
Thank you. Thank you everyone for participation in quarter F4 and FY21 earnings call. In case of further queries, you may get in touch with Pareto Capital, or feel free to get in touch with us. We look forward to interacting with you in next quarter. Thanks a lot. Stay safe.
Thank you very much. On behalf of HGINFRA Engineering Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.